The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day, so you can be up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and that anything shared in our content should not be construed as financial advice.
5, 4, 3, 2, 1.
Where does the allocation of funds happen right now?
And it'll go exactly where you want it to go. The next bit, after that, you'll enter and then it'll go up.
How would you enter, right? What if you're new to order blocks? What if you're nervous, right? Let's say.
And the correction moves is in the A, B, C move.
Today's stream is made possible by our partners and sponsors. If you're looking for a new broker, trying to get funded, or looking for a trading community to join, consider checking out the links in the description below. By using these links, you'll get access to great products and be supporting the channel. Without further ado, the show is about to begin.
Good morning, good morning. Welcome to the stream. I see y'all in the chat. Denisha, George, Doremi, Antonio, official fam. I see y'all. Global, Isaac, Bakamans. Let's go. So if you're coming over from my stream, you're going to see we did smash 45 pips this morning. It was a great trade. So I'm going to be going over this gold trade today. But before we do that, I just want to give you a top-down analysis on all the other pairs I have here. So we're going to be talking about GJ. We're going to be talking about GU, okay? And I'm going to show you how I got this analysis here. And then we're going to be talking about gold, all right? So if we start with GJ, if I just clear off this chart here, just taking a look at the daily. So early this morning, basically what I saw was I seen that this daily candle had a little bit of rejection. It's looking green, right? It's looking bullish. It's looking like, okay, we may fill out this range here. Okay, so that was my theory. So my theory was overall, right, we're going bullish. So it's about an 84 pip gap. So taking a look at the 4-hour, by the time I came onto the charts this morning, if I put it in replay mode, price was like around this point, right? So me just looking at this, I understand that I missed the move. And what's really important when you're trading is to know when you missed the move, because the worst thing you could do is just hop into a buy or sell when the move's already over, right? And then you're going to be losing. So I'm going to show you what I mean here by I missed the move. If I play this back, I see that price created a resistance right here. Okay, if I go to the next candle, we closed above, all right? To me, I have a little cheat sheet that I created for myself. Those of you who are members of my channel, you know that our cheat sheet is that when we have this range here, that usually it creates a range for price to drive up, right? So usually that creates a range for the next candle to continue bullish. And that's exactly what it did, right? So if we go to the next candle, boom, right? We filled out that range. So again, when I came onto the charts, I understand that, hey, we broke up through resistance. We filled out the range. I look to the left. We got this nice huge candle here to fill out to this resistance coming over. So I'm like, okay, cool. I need to be patient. I need to wait for a setup. All right, so let's put this back live. So hopping down to the hourly here. You see price was around, yeah, it was around this point when I came onto the chart. All right, so hopping down to here, I said, all right, we got a doji candle. This means that price is indecisive, right? It doesn't know if it wants to go up or down. It's kind of caught in the middle, and I understand that, so I'm going to stay out of it, right? And then I have my clear zones up here for this resistance. And if I measure this out, I understand that price is about 30 pips away. But for me to take a buy based off of my rules, I would want to see price break these highs, right? Because price already came up and rejected. So what's the odds that the next candle comes up and makes another doji? You know, we don't know. So if I'm taking my buys above these highs and my resistance is right here, it's about 8 pips away, then to me, that's not a good trade. You know, that's not a big enough range. So for today, I said, you know what? I'm going to stay away from GJ. It is my favorite pair, but again, it's just being able to recognize and understand, hey, The move already happened. You missed it. Probably should stay away. All right. And then if we update it to what it's doing now, it did slowly consolidate its way up there, right? So again, I don't look at it as I missed out. I just look at it as me staying disciplined, following my rules, and just staying away from it. All right. So for that reason, I stayed away from GJ. But again, it did come right up into this zone here. If we take a look at the 4-hour, the 4-hour did exactly what this last candle did, right? If we take this away, and the 4-hour candle did start at 9 o'clock if you're on New York time. If we take that away, the 4-hour, all it's doing is filling out this range that was created. See this wick range? It's just filling out this range. Okay, so we talk about something that you could have done. If you want to look at it from that perspective, if you trade 4-hour candles, maybe you could have said, all right, let's put a line here at the resistance on the 4-hour, and let's see when price breaks through. So if we go back to the 15-minute, now you have a 4-hour mark. So now you know that if price starts breaking up through here, it's going bullish, right? So let's see, 4-hour starts at 9 o'clock. Go to the next candle. Okay. It's a weak candle. We do have a lot of rejections, right? So maybe this could have been a sign, right? You may go back and back test and say, okay, what were the signs that I missed that price was going to go bullish? Well, look at all these rejections to the downside here. It's a lot of rejections. Okay. Let's go to the next candle. And then this next candle just kind of shot up. So to me, just looking at this, I like to wait for closures above the zone. And to me, this didn't close above the zone. If anything, it closed way up here, right? Way close. So I don't think there's any way I would have gotten into an entry here if I go back, and even if I go on the 5-minute, maybe looking at the 5-minute, we did get a closure above. But to me, the 5-minute is not that strong. I like to use the 15-minute or higher for closures. So, sometimes you just can back test moves and say, you know what, how could I have gotten in? Maybe follow my rules, I wouldn't have gotten in. All right. So just looking at this, it is what it is. We missed it. That's cool. All right. So that's kind of my bias on GJ. I believe it's just kind of consolidating here. All right. Moving on to GU. So GU moved a little funny today. I'm going to take this away and I'm going to show you why I have this here. So looking at GU, if I just go back in time to when I started streaming, this candle looked bearish for the day. Okay, it looks like it was coming down. It looks like price was going to possibly fill out this range here. So when we come down to the 1-hour chart, I'm going to show you what I saw. Actually, it was right about here, right? So when I came onto the charts, I seen that price was moving up. Another thing I could see is, I kind of make an invisible trend line for myself. I don't usually put them on the charts too much, but I could see that price is kind of like bouncing off, right? Kind of looks like it's stuck in this range. We are downtrending, but we're still in a range. Okay, so I do understand that. So in order for me to break this down is just to simply grab support and resistance, right? So if I'm grabbing support and resistance, I see we have a clear zone up here. Okay. I see we have support here. And I see we have support here. So what I like to do is I like to point out key levels for myself so that I don't have too many zones. All right. So to me, this zone is really unneeded because price is ranging, right? Price is ranging in this area. That's why. So what I like to do is I like to say, okay, where do I see price ranging? Let me go down to a lower time frame to get a better clear point here. If I make a box, right, you can see that price is kind of ranging between here and here. It's kind of like it's like stuck in a range. Okay. Or if you want to be petty, you can make little ranges for yourself. You can say, okay, price ranged here. Price ranged here. You can bring this across too. Price range here as well. Okay, so just being able to recognize where price ranges is kind of what helped me stay out of GU today. All right, so if I put this in play, you're going to see that GU tapped this area. All right, now during the time that GU was moving bullish, I'm thinking, okay, what if we break above this zone, right? What if we break above this area? Because we did tap this area, right? Then I'm looking above for buys, and then I'm looking, okay, where can we go? But I do understand that this candle went from looking like this. It went from looking like this, because it did look like this for a while, and then it ended up closing down, right? We got a wick rejection here, to closing back in the range. How do I know there's a range here? Well, I created a range right here, right? So if I bring this over, I'm like, okay, we close back in that range. So for that reason, I would stay out of buys, right? For me, there's no buys until we get above this range, okay? Now, if we fast forward, price is coming down, coming down. So what I decided to do was point out some key levels. So instead of keeping these boxes here, what I did was I said, all right, I'll just take this support. I'll make it a key level. And, it doesn't really matter what you choose, as long as it's clearly a zone that you see price likes to touch. To me, this is a key level. And the top of this resistance right here, to me, is a key level because it lines up with the bottom of this range as well. So I'll just line it up right here, like so. Key level. Okay. So now that I have my key levels, I know, okay, if price comes back into this range, it's still in a range, right? So what I'm doing is I'm telling myself, do not trade here. Do not trade here. Why? Because if we look left, we look at the history, price is just ranging. Okay, hopefully that makes sense. I see you on the chat. Good morning, Otto. I see you, Rod. SMV, hello. King Jeffro, I see you. FX Piper, I see you. All right. So yeah, so this is how I create zones for myself not to trade in. And if we fast forward this, what happened? Price came down. Now we're in this zone, right? But again, this is my no trade zone. Why? Because I see we ranged in here. We ranged. Now I'm going to show you something else. Now check this out. While I was live, someone in my chat said, hey, I may take a sell on GU. And I looked at GU and I'm like, what are they looking at? And I'm like, oh, okay. Because we broke out of this range. But if you look at history, what happened over here? What happened over here when we broke out of the range? We closed below, yes. But then what the next candle do, right? Let me take away the distractions. What the next candle do? Next candle came right back up into the range, right? And if you look at this, it probably faked a lot of people out because it acted like it was breaking the low and then it came right back up. So I always say history repeats itself when you're trading. So if we come back live, right? If we come back live, we were right here. Okay, I was showing you that price did break out, but then the next candle came back up into the range. Look exactly what it did here. Okay, so for that reason, I stayed out of sells. Okay, for that very reason, I stayed out of sells. All right, so my tip to you today, if you didn't learn anything from me, learn to always look back in history. See if you could find those ranges, because it kind of gives you a hint to, hey, maybe you shouldn't take this trade. All right, so what I did was just to remind myself, I just kind of like moved this box over, or basically move this box over just like that. All right. That's basically what I did. I said, you know what? Let's just make this a whole no trade range. No trades for me at all. All right. And if we update this where it is, looks like it did come up, create a lower high here, and then it did come down. Okay. But what I would say is wait for confirmations. Wait for confirmations. I think that waiting for price to come up and making a lower high is okay. But I also think that there's nothing wrong with missing trades as well. Alrighty. So it does look like, as we speak, price is breaking this support. Looks like it's filling up the range of this candle. Looks like it probably will come down to this support area. All right. And then moving on to USD CAD. And after USD CAD, we'll talk about gold. With USD CAD, just looking at the daily, I didn't like the way it looked. So my analysis took probably about 10 seconds this morning in USD CAD. Just looking at these candles on the daily, again, this is the daily candles. I just didn't like it. It's too much, too many wicks. That just tells me price is ranging. If we go down to the 4-hour, you're going to see, yes, we're in a downtrend, but price is just kind of like this. You know, to me, that's a trap. That's a trap. So I like to stay away from that. So I said, you know what? No USD CAD for me today. Okay, Narish, hello. I see you. Vinny, hello. Your chart has green candles and my red candles. Why? Why does the chart have green and red candles? I don't know. We'll have to ask the chart. All right, so looking at gold, I'm going to show you the trade we had today on my live stream. So I did call this to go 45 pips, but if you held it, it looks like it ended up going up to 77 pips. So this was a great trade. So what I'm going to do is go over this trade with you today. And I'm also going to show you a trade that I missed today as well. So let's clear this off. Let's go back to 8 o'clock. All right. Actually, first we'll look at the daily. So check this out. We were kind of up and down with gold today. I'm going to tell you why. So this morning, price was maybe about right here. Okay, it didn't get this high yet. It was maybe about right here. And I'm looking at gold. I'm like, you know what? Gold's been stuck in this range for a little while, right? And it looks like, okay, maybe we're trying to break out of the range today, right? You see this daily candles bullish breaking out of this range. So when I look left, if I get my major zone here, I see we have resistance, right? We have resistance coming across. So my theory this morning is if gold can break out of this daily resistance, then maybe looking at price action here, looking at these nice candles, maybe we can fill this out. Okay, if we get volatile today, maybe that can happen. All right. So what I did was this morning, I put a daily line on top of this resistance, okay? And that was going to tell me if gold broke above. Right? Then I broke it down. We came down to the 4-hour here. And we were looking for key levels, right? So when you look for key levels, I'm going to give you a little tip. If you see something like a head and shoulders or a double top, right? You know how they have the neckline? Let me give you a pro tip right now. Here's a pro tip for you, just for watching the stream here. I use these as key levels, okay? I use the necklines as key levels. All right, I find that they work very, very well on gold. No one will ever tell you that, but I just told you that. So pat yourself on the back. If you came to the stream today, I just gave you some value, all right? So look, so with that theory in mind, right? If you see like left shoulder, head, right shoulder, again, it's pretty sloppy. I know it's pretty sloppy. We got the neckline here. So within theory of using our neckline, we're going to use this as a key level. So check this out. Bang, key level. All right, so now we have a key level in gold. Okay. Sorry about that. That was my dog. There's someone at the door, so sorry about that. Okay. So, again, so we're tagging out our key levels here. All right. If we go down to the 1-hour, the next thing I did was I said, okay, I need to look for some type of resistance zones in here, because what are the odds that gold is just going to shoot up 119 pips without retracing a little bit, right? What are the odds? It can happen, but, you know, we need to find some zones. So what I do is if I don't see anything good that's like right off the bat, I could look at it. I like to grab my paintbrush. So if you grab your paintbrush, I promise this will make life so much easier for you if you use the paintbrush here. Just follow price. Price came down, right? Came down to here, came up, came down, came up, came down, came up, came down, right? So out of that, what do I see here as resistance? Well, I had a resistance here. I had a resistance here. And there's one up here, but it's above the key level, so it doesn't matter. All right, so let's delete that. So now I kind of have a zone. Right now I have a zone to go off of. So we're going to use this. And we're going to use this. So my bias here was, okay, if we break above this daily level, then I see buys on gold. So let me show you what happened here. Hop back down to the 15-minute. It was looking like this at the time, right? It was looking like this at the time. And what do you know? That next candle just completely flew up. Like it just completely, no wick down, no nothing. It just completely flew up about 75 pips. If you're on stream with me today, you know that we were just watching this like, wow, don't get FOMO. You know, there's no wick, there's no bottom wick. You know, we're just going to have to wait, you know. But what we do see is that price did close above our daily zone. Now notice how price literally exactly touched this resistance. Okay, so typically I do like to wait for a closure above the zone, and then I like to look at the next candle to see what it does. Okay, however, within following my rules, that did look good, right? That would look good. But within my rules of risk management, typically I put my stop loss below the previous candle. So if I'm going off of the next candle, this would be the previous candle. My stop loss would have to be here. So I know before this candle closes, I already know my stop loss has to be at least 60 pips. And when I trade gold, I don't know about you, but I don't like to have a 60 pip stop loss. So I'm going to tell you, for that reason, I did not take a buy in the next candle. But you're going to see the next candle did indeed go up. So check this out. It did give us a little baby wick here, and it did go up, yes. But again, just following my rules and staying disciplined, I did not take it. Now you may say, Lins, why not put your stop loss below here, right? Why not do that? Well, sometimes I do that, but it just really depends on the trade. It really depends on the trade. So I'm going to tell you something. So because this candle moved 79 pips, 78 pips, that's a big move, right? That's a big move. So I was anticipating for price to maybe consolidate, make a couple wicks before moving up. And if I have like a 10 pip, not even 10 pip, not even 10 pip stop loss, knowing how gold moves, I could easily get wicked out, you know? So for me, having a little small stop loss on gold just wouldn't work. So I stayed out of it. All right. Now looking at it, yes, it would have worked out if I did take the trade, but it's all good. We were patient. All right, let's go to the next candle. Okay, so you're going to see here, now we're starting to form some type of resistance. Okay, and then the next candle, I believe, comes tumbling down. Yeah, so look, so this is where I'm going to say we missed our sells. To me, this is a trade that we missed on stream today. It's about 80 pips. Took a similar sell yesterday, literally like the same setup. And I'm going to show you why. If we go to the hourly, at the time, I believe I had a, yes, I did. Okay. So if you go back to my live stream, you'll be able to see this in real time. But I did have an hourly resistance right here. I had this line right here. So if we go back to the 15-minute, what you could have did here was just understanding that price is at a major resistance zone. Seeing that price comes through our hourly zone here should already tell you that, hey, we're probably going to correct this news. Okay. By the way, I forgot to mention this was news. This was news that ended up driving gold up like this. If you come over to the Forex Factory, it's not news that you could see here, but if you click on news, this tab right here, you will see, what was it? It was US Treasury. Was it a US Treasury? It was one of these. It was one of these, but I'm trying to think, what was this, an hour ago? Oh, right here, the NATO. I'm sorry, US NATO. So this was 2 hours and 42 minutes ago. So if you click on this, and it was red folder news, a thing you could do is you could follow this Twitter and put your notifications on too if you want. But if you follow this Twitter, it did give some red folder news here. So this is why gold did drive up. All right. And what I find in gold is a lot of times it likes to correct the mood. It likes to correct the news. So if you just back test that, you're like, okay, What happened to gold? Oh, it moved up because of news. And then what happens after that? It comes right back down, right? It has to correct that news move. Okay, so with that knowledge in mind of gold always liking to correct news, I had a feeling we'd probably drive down. Okay, but at the time, I believe I was answering some questions, and I believe we were on like GJ and just kind of like checking out some other charts while we were waiting here, and we kind of missed the push. Okay, but just looking at this setup, the way you would take this setup is as soon as price, starts pushing through your key level here, what I would do is I would low risk it. I would really low risk it just because of the way this is set up. If you follow this candlestick pattern, like if you back test these 3 candlesticks, you're going to see it happen a lot. So the more you see it, the more you're going to feel comfortable with it. You're only going to feel comfortable with something the more you see it. Okay. Secret sauce. I see you, Mitchell. I see you. But yeah, so we did miss that trade today, but it's all good. It's all good. We will catch the next one. So I'm going to show you the trade we did get today. So, again, patience pays. So we stayed patient. We waited. We see, okay, price is coming down to this support area, right? So let's go to the next candle. Okay. Now we're establishing support, right? Why? Because this candle is rejecting. This candle is showing me it's rejecting to go down. It's a wick rejection. So if I get a major zone here, this is just me saying, okay, price is kind of like building up some type of demand, right? This is like a demand zone now. All right. So let's go to the next candle. Next candle closed bullish. Okay. So to me, this was indicating to me that price may just be doing this little pullback thing just to continue driving up today. Why? Because we did pass those daily highs today. We did. So maybe price is just pulling back, because what I noticed with gold is the market makers, if you see people are in buys here, they're going to take you out, right? They got to take you out because they don't want you to make money. So we had this strong push above the daily. Price came right back down. Let's take out all these buyers. Let's make them close their trades. Let's make them take their profit. Let's get them out the way, and then let's drive back up, right? So you gotta just pay attention to the way the market moves. The market does that all the time. It likes to do these strong liquidity grabs just to take you out, just to make you close your trade, right? Just so it could shoot right back up. So a lot of times you may look at the chart, you may say, whoa, it just shot up out of nowhere. But take a look at that. When you back test it, you're going to see it did a liquidity grab, then it shot up. Okay, so just take notes of that. All right, so with that theory in mind, this was 8:45, and I did this based off of the 4-hour chart. So if you look at the 4-hour, I said, okay. I said, looking at the 4-hour, we did close bearish. I said it's 8:45, so that means we got 15 minutes for the next 4-hour to start. Now, to me, that means the next 4-hour does have potential, right, to continue to fill out this range. Okay, same thing I showed you out a little bit earlier. Continue to fill out this range. And it did exactly that, right? If I put this forward, you're going to see it did exactly. Look, it's still doing it. Look at that. Still doing it. Okay. So let's go back in time. For 1 second. Let me put my 4-hour mark here. So what I did was put a 4-hour mark here just so that I know. And then we'll go back. I'm freezing a little bit. There we go. Okay. So look, so I have my 4-hour mark. I don't really need the daily anymore because we kind of figure we're gonna drive up. But all right, I have my 4-hour mark. I'm gonna erase that hourly zone. I don't need it no more. The only thing I need is just looking at this clean candle. If we do drive up, I know that we can fill out this range. So this is how I had my trade set up this morning. Looking for the 4-hour to continue bullish, right? If we continue pushing past this zone, we will continue bullish. I'm looking for this as a TP1 and potentially a TP2, right? If we continue. So let's go to the next candle. We come down. Now, the next candle being bearish is perfectly fine with me because it's the beginning of the 4-hour candle. And I need price to create a wick down and then drive up, right? If we go to the 4-hour, you see that wick down? That's price creating a wick down, okay? we want price to come down a little bit first. So we want it to create a wick down on a lower time frame so that it could confirm rejection, right? Confirm to me that we're rejecting to go down and that we're going to push up. So let's go back. So another thing is that we closed weak bearish, right? This is a weak bearish candle. This body closed above my zone here, okay? We still closed above this candle, all right? So what I did was I said, all right, I said, I'm going to put a buy stop right above these highs, okay? So I said, if price breaks these highs, I'm anticipating, right? I'm anticipating a candle flip. So what that means is I'm anticipating the next candle to flip bullish and continue. That's a big candle, huh? And to continue driving up, right? Because the way that looks on the 4 hour is you're going to see this will be the wick down on the 4 hour and this will be the drive up. Okay. Now, the only way to really understand this is to really just hear me say it again and again and again and to really see it. All right. So if we go to the next candle, boom, that's exactly what it did. And this is the exact trade we took on stream today. And if I put this here, just so you can see it, the stop loss is below the previous candle. So it'll be below this one, right? Because this is the wick down on the 4 hour. So if we go to the 4 hour, you can't see it here, but stop loss is right here, okay? The wick down on the 4 hour, buy stop is right here. See the buy stop is? And check out this sniper entry. We've been catching these all year so far. We've really been catching these. Look at where our entry was. Look where price is right now. So those of you who were on my stream earlier, if you held this, you'd be up 132 pips right now. I know some of you said you were holding it, so I'm assuming you're up 132 pips, but this strategy is like golden. We've really been catching the beginning of these 4 hour candles back to back to back. So if you like this, make sure you give the video a like, because I'm telling you, the education here is golden. It's just completely golden. But yeah, so my TP was 45 pips to the dot, 45 pips. It was smashed, closed my trade, and, you know, that was that. You know, so I'm just going to read the chat just in case you have some questions. Let me know in the chat what you think about this trade. What you think? 40 pips on gold. Let's see. Narish says news. Trading news can be risky unless you have a good proven strategy. I don't trade any news. I don't trade news. GU stop loss question mark. This is gold. This is gold. But if you're asking about the stop loss was below this candle right here. Right below this candle. Really below the 4 hour, see? Below the wick on the 4 hour. Sniper entries. Entries here, stop loss below. Take that candle all the way up. Do you have a course? No, I just trade live. I just trade live every day. There's no course. Good question, though. Any other questions? Runner 120 close. Let's go. Let's go. No problem. Okay. See, you were on stream. John was on stream earlier. Beautiful. Good. Nice to see it. Where you have your buy stop, how did you get the name to stay there off to the side? Oh, it's a template. So let me come up here. So let's say you're using a horizontal line, or I think this is a horizontal ray. Yeah, it's a horizontal ray. When you double click it, you could change the color. If you click text, then you could type text. Like you could say TP smash, or you could say I stop. You know, you can put whatever you want here. All you gotta do is just click on text, and then it'll stay there. And if you want to save it, you have to right click, press template. If you click save as new, then you just type the name of your template there. Okay. And then anytime you want it, you can just click on template, and you see I have my templates here: buy stops, sell stops, If I click sell stop, it'll say sell stop. See that? If I click stop loss at break even, it'll say stop loss at break even. It's pretty cool. Works pretty well for streams. But yeah, we had some beautiful buys here. And then look at the market manipulation. Look at price. Look what the market makers do. See this candle? Took everyone out who bought early, right? Took everybody out. Continued pushing up. And if we look at the daily now, our theory from this morning, like we said, if we push past the zone, we should be continuing going bullish here. So we did exactly what we said we're going to do. All textbook, let's go. I see you, CJ. Let's see. Which time frame you advise for entry? My advice for entries is to use whatever time frame works best for you. So, everyone's different. You may like the 1 hour, you may like the 4 hour, you may like the 5 minute, you may like the 15 minute, you may like the 30 minute. You'll have to figure out which one works best for you. We're all different. So the only way to figure it out is just to practice and practice, Do you live stream here every day? I live stream on YouTube every day on my channel. Thank you very much. No problem. Best time frame to trade, whatever works for you. All right, y'all. Appreciate y'all coming to the stream. Really do appreciate it. Hi, Mohammed. I see you. I think that's all I got for y'all today. So hopefully y'all enjoy the rest of your days.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember to check the description below if you're looking for a new broker, trying to get funded, or looking for a trading community to join. From all of us at A1 Trading, have a great day, and we'll see you next time.